So you're looking to buy a house and you're trying to get a mortgage and you're confused on which mortgage is best for you? Stay tuned. I'm going to tell you which one works best. Hey, what's up everybody? Brian McCauley here, your mortgage expert. So you're applying for a mortgage and you're hearing all these different lingo types: FHA loan, VA loan, conventional loan, USDA loan, jumbo loan. It's so confusing of like which one's best for me. I'm gonna go through some basics and kind of explain the different major mortgage types, who they normally pertain to, and the pros and cons of each. You can decide after watching this video which one you think would be best for you, but ultimately when you connect with your mortgage advisor, if you're in Texas, we can take great care of you. If you're outside of Texas, connect with an advisor in your area, and they will ultimately be the ones that will guide you in the right direction. So there are a couple major different types of home loans. Let's start with FHA. FHA is a great loan. It's designed usually for first-time home buyers for a couple of different reasons. Number one, it's more flexible on credit scores and credit profile. It allows for more bumps and bruises. It allows for a lower credit score. FHA loans sometimes will go down to 580. It's a really good starter loan for anybody that falls in the category for credit. Second thing about FHA is that it allows for a higher debt-to-income ratio. So let me tell you what I mean. Some home loans only allow like a 45 or a 50% maximum on your debt to income. The great thing about FHA is it will actually allow you to borrow up to 56% of your income. If they're taking a different type of loan and they're restricted on 45% debt to income and FHA allows for 56%, they may be able to get a home going FHA that's a higher price point than they would going conventional or something else. Third thing about FHAs is that it only requires 3.5% down. People like that. They either don't have the cash or they want to keep the cash for something else. FHA's designed for those three main reasons: credit score and profile, debt to income, buying power, and 3.5% down. Conventional loans, let's talk about that. You hear Fannie Mae and Freddie Mac on the news, they are the ones in charge of these loans. So conventional loans are a little bit more traditional, old school, what I call like clean cut vanilla loans. If your credit score or credit profile is strong and you want to put more money down, conventional is the most traditional product. Why? Well, it usually gives some of the most competitive interest rates. So if you've got great credit, if you've got a good amount of money down, 10% down, 20% down plus, conventional is going to be the best route for you because it's tailored specific to the financial profile of the individual. So conventional is normally the best way to go if you fall in that category. Let's talk about a jumbo loan, like a jumbo jet, right? Just a bigger version of conventional. So once you get over a certain loan limit, conventional loan will cut off at some point. It's about 647. So if you're getting a loan above that, normally you're going to want to get a jumbo loan. Jumbo loans, because you're borrowing so much money, are very similar to the guidelines on conventional. They're a little more restrictive on the credit score, the credit profile, the debt to income. They'll normally only let you borrow about 45% of your debt to income. But if you're buying a big house, they really copycat the conventional guidelines, sometimes a little bit more restrictive as well, to make sure that you're a heavy qualified borrower because you're buying such a big house and you're borrowing so much money. They want to make sure that they're not putting you in a bad position. So if you're buying at a smaller price point, conventional is going to be the model and the fit. If you're buying at a bigger price point, jumbo is going to be the model and the fit. They're the best and most competitive rates, but they're a little bit more restrictive, again, around credit score and profile, down payment, and debt to income. A fourth one that's super popular is a VA loan. Now, VA loans are the most amazing loans, and they're for the veterans that have served our country. That's the least that we can do. Now, it's not for every veteran. You have to be honorably discharged, and you have to have a certificate of eligibility. If you serve the country and your certificate of eligibility is in good standing, you're eligible for a VA loan, I tell people to take it. Now, just because someone is a veteran and they're eligible, they still have to have their financials in order. But VA is very flexible around those guidelines because they want to serve veterans and make sure that they can get them in a house. So VA loans can go down to sometimes a 580 FICO score. The coolest thing about VA loans is they're 100% financing. The veteran literally has to come out of pocket, no money on the down payment at all, and it puts them in the best position possible. Super competitive rates, no money down. There actually is no debt to income restriction on VAs, which sounds very, very weird, but VAs use what's called residual income. It's basically how much money is left over at the end of the day on a debt to income perspective. They're specifically designed for veterans that have a COE, 100% financing, credit scores down to 580. They're lenient on the profile. It's a great thing for the people that have served our country. Lastly, I want to talk about portfolio loans. Portfolio loans are private loans. So think about it this way. If you and I owned a bank and we had $20 trillion and we didn't need the government, FHA, Fannie Mae, whoever, to give us a loan, we wouldn't need those products and those rules, so we would make our own loans. Private institutions make their own rules so they can give loans to consumers that other people can't. Normally, these are for non-traditional loans. Let's say like a self-employed person with 1 year of tax returns, or somebody who has a lot of assets but they don't have a job. Things that honestly make sense and we know the loans will perform, but they just don't fit into the traditional generic model of FHA, conventional, jumbo, or VA. I always talk to these clients up front about these portfolio. A lot of these clients are good clients. Most of the times, those banks and credit unions that offer these use it based on logic, right? If somebody has a great credit score and they're putting 20% down, but something just doesn't add up on the tax return or something weird, they know if the people have good credit scores, if they're putting 10 to 20% down, they got money in the bank, they're not going to default on the loan. The downside to those portfolio products is normally the interest rates are a little bit higher than your traditional model. They'll loan you the money where everybody else won't, but of course they're taking a risk in their eyes that everybody else isn't. Most of the time, people that take portfolio loans will take that higher rate, understanding it's just a temporary product, meaning they're probably not going to keep that higher rate for more than a year, 2 or 3 years, whatever's keeping them from getting a traditional loan. We usually work on a plan after closing to get them back with mainstream, so eventually we can refinance out of that product and get them a more competitive rate, but at least for the time being, they can become homeowners, they can gain some equity, they can get some ROI, and they get tax deductions. So you guys understand the basics of the products. You probably know which category you fall into so far. But if you don't, reach out to me, reach out to your lender, figure out exactly what's best for you so they can help you navigate the product and the program that's best for you. Listen, if you found this video helpful, do me a favor, give it a like. Click and subscribe below so you can be the first to know and stay ahead of the curve on all the financial tips and secrets when it comes to buying a house. If you've got comments about this specific video, leave them below. I promise to get back to you, but more importantly, just understand that I'm here to help. If you don't have anything specific to this topic, but you want to chat about your current home loan situation, buying a house, refinancing a house, selling it, whatever, do us a favor. Call us, email us, text us, set up a consultation. We're here to help. Until next time, stay tuned.